All right, so it's 11:02. Let's get started. Okay, here's the disclaimer. So it's an educational disclaimer. GProf, that's my online name. My name is Gilles. It's French, Gilles. C'est la façon de le dire. It's a way to say it in English. Online, I go by GProf. White Sands Trading and Mentoring is my company. And the Aviators is not an investment advisory service or broker-dealer. This webinar is provided for educational purposes only. No content presented constitutes financial, investment, or trading advice, nor is it a recommendation to buy or sell anything. All examples are hypothetical and for learning purposes only. You are always responsible for your own trading, your own decisions, your own investments, and all investing and trading involves risk, as you all know. So I've decided to call this presentation the Smart Investor's Playbook, Building Wealth Without Guessing. This is part of a presentation that I give to students, college, university students. I have given this presentation in different workplaces. I was just at a real estate firm just a couple weeks ago doing this. So I've modified it because the clientele, the people that I'm talking to, are obviously knowledgeable in trading. What we're going to be talking about is not really trading, it's more investing. And the differentiation between the two is that trading is short term. It's day trading within a few minutes or swing trading during a few days or weeks. Investing is absolutely long term. When I say investing, I'm thinking 25 years or more, depending on where you are in your life. I'm 56 years old. 25 years from now, you do the math. I'm not really planning this for 56-year-olds. The presentation is meant for the 56-year-olds in the group to maybe think about their children or younger people that might be able to start getting involved earlier. But there are strategies for older people as well. Okay, so a little bit about me. I was born and raised in a French-speaking community in Northern Ontario, Canada. I am now based just north of Toronto. I have a bachelor's in business and marketing and a bachelor of education from Sydney, Australia. I was a high school math, business teacher, finance, marketing, entrepreneurship for almost 30 years. I just retired in September of just this past September. I was a university instructor in the education field for 26 years. I'm a husband and father of two amazing young girls. Outside of the classroom, I'm fitness focused. I think you can see I've got a standing treadmill that I put underneath my stand-up desk. I was thinking about walking during this presentation, but I thought it'd be a little bit distracting. I'm an avid reader. I've read hundreds of books on business, trading, mindset, 80-20, a lot about positive thinking, and that's most of my books recently are not on trading or business. They're more on mindset and how to live a positive life. I'm a recreational pilot. I was licensed in 1994. I've got a scuba diving license because I'm drawn to exploration and perspective. I'm a lifelong traveler. I've got the joy of traveling young and have always wanted to share that. Therefore, I took my daughters out of school last year for part of the year, and my wife and I, we both took a year off teaching to be able to travel. So we were in Australia, we did a cruise in Italy, Croatia, then we went to Paris and London, and Dubai is definitely on my list, especially when I think of a day like today where the buses are canceled here, the schools are closed because of a snow day. So tiny bit more about my background. Education first. So for nearly 30 years, I was a French-Canadian teacher at both the high school and university levels. In the recent past, I've concentrated a lot on teaching about saving and investing, decision-making. I now speak to students and professionals and employee groups advocating for financial literacy as a life skill, because with the right education and habits, financial security by age 50 should be the norm. It's not, obviously. You all know that. And the reason I say you know that, I'm sure you know some people that know nothing about what it is we do in Avi's room. They know nothing about stocks or investing in real estate, et cetera, et cetera. I'm an investor by practice. I've been investing for almost as long as I've been teaching. I don't manage other people's money, even for family. I don't need the stress, even though I've been asked multiple times, hey, will you take X amount of dollars and will you invest it for me? Not something I want to do. However, I do teach family members. I help my parents. I help my mother-in-law with their portfolios. But the decisions, it always comes down to them. People open up and control their own account. I teach them how to think, not what to blindly buy. And I wanted to have a SPY chart available. Let me bring it up. You know, because a lot of people will get emotional. Let's just bring up SPY. Actually, this is SPY M. It's a cheaper version of SPY. Oops, SPY. There we go. Why it's not coming up, I don't know. Uh-oh. Seems to have crashed. Bring it up to another screen. Yeah, that's odd. Try it on another screen. Hang on a second, please. Oh, TradingView completely crashed. Thanks for your patience. Yeah, not working. Okay, well, I won't be showing SPY. What I meant to show is just, you know, the fluctuations, and, you know, people panic. In 2020, I had people that I knew, and I don't want to name names because this will go public, but they were panicking, you know, when COVID started hitting in March of 2020, where the market dropped. I know people that sold. They sold their investments, stuff that had been in there for a long time. You know, what you should be doing is buying, right? That's the market over the long term has gone up. I can't promise that it's going to continue going up, but I have a feeling that it will. People need to understand that the psychology of investing is to plan it out for the long term. So this started at home, not as a business. I always felt something important was missing in the education system. When I became a parent, I knew these lessons would be taught at home. My daughters started investing the day they were born. However, they don't know about it. I started putting money aside for them, and it's something that I will be teaching them. They're still a little bit too young for that, but it began as a responsibility and not as a business idea. As I was building things out for them and building out my savings course and then my investing course, which I'll talk about later, this is not a marketing thing. I'm not trying to sell anything, but I will share what it is that I've built. When I started doing it for them, I decided, you know what, this is bigger than them. So I made it into White Sands Trading and Mentoring. It's built on real lessons. Early fascination with the markets led to hard decisions, hard lessons, including real losses early in my career. Invested on a stock tip in the early 2000s and before the bubble crashed and or burst, and the company went bankrupt. Realized that having a business degree did not really mean that I knew what I was doing when it came to trading. So that experience shaped a long-term disciplined approach focused on risk, time, and compounding, and a belief that investing should be clear, simple, and accessible. Right now, there is tons of information online. You know, everybody, you guys know that they're gurus and furus, and there's tons and tons of information, but there's sometimes too much information. So I decided to streamline it, to build something that was a little bit clearer. The way I saw it in my head, it was an A to Z process, starting with saving, then going on to investing, and then going on to, if possibly, trading. Let's continue. So I will go pretty fast in a lot of these slides. Stop me if you have questions. Raise the hand. I think I'll see it out of the corner of my eye, or the mic is open. You guys can ask questions. So the housing affordability crisis in the States, this is information I got online probably 6 months ago, but we're looking at average home prices in the 400 to 500,000s. In Canada, where I am, actually in the town where I am, just recently I looked at it and was talking to real estate agents last week, that it's around $800,000 for an average home. So at 20% down payment in the States, you need 85,000. In Canada, you need 135,000. I don't know a lot of young people in their early 20s that have that kind of money. Obviously, you can put 5% down. So I've got it here at 5%, still $20,000. In Canada, 5% is $34,000, $35,000, $40,000 down payment on a house. So why am I sharing this? I thought I was at another slide, so let's continue here. Grocery costs, obviously inflation. Everybody knows about inflation and how groceries have risen almost 25% in the last 4 years. And right now on the news, we hear that, oh, inflation is taming. It's coming down. It's just above 2%, and that's where it should be. However, nobody talks about the fact that that 24% rise is still there. We're just not adding more than 2.7%, I think, is where it is right now. But it's still there. It's still incredibly high. The gap between wage growth and inflation, this gap is getting wider and wider. I don't know a lot of people that their wages have gone up 24% in the last 4 years. Right? So that's why the gap continues. This is a slide I was talking about. If wages don't keep up with inflation and housing prices, et cetera, the only way to preserve and grow your purchasing power is through investing. The gap in the education system, like I said, I was an educator for nearly 30 years. So despite 12 to 16 years of formal schooling, students graduate without ever learning how to save efficiently, understand credit cards and debt and mortgages, et cetera, et cetera. They don't understand how to build wealth through investing. Instead, financial literacy is left up to chance, often influenced by family, sometimes that don't know much about it either, or peers or marketing from banks. So the missing foundation, as far as I was concerned, was saving. So this gap isn't theoretical, it's real, and it affects almost everyone. And instead of waiting for the education system to fix it, I decided to build what should have existed all along. So I built what is called, what I called your ultimate guide to financial independence. It's a free guide to saving, investing, and building wealth, no matter where you start from. So I created the savings course, not as a product, but as a foundation. It is free. It is available from my website. Let me just get the right screen on here. Sorry, got a lot of tabs open, which that's not the one. There it is. Okay, so that's the PDF. It's like 50 some odd pages. There's a table of contents. It's done very professionally, if I do say so myself. And like I said, it's available for free. So if you go to my website, whitestandstm.com/services, it's right there. Savings course. Yes, it will ask for an email address, and then it's sent to your inbox. So saving is not about restriction. It's about security, optionality, and control. So before anybody thinks about investing, and absolutely before thinking about trading, they should know how the savings framework works. So I built this short structured PDF. There's the table of contents again. So the silence about money, I wanted to talk about this because people are rarely willing to discuss finances openly. Everybody in this room, I'm sure you've had difficulty talking to people about what it is that you do, especially, when it comes to trading, but even just talking about finances. I don't think it's because people are asked specifics. It's just because most people are embarrassed at the fact that they don't know enough about saving or investing or trading. Even in preparing this presentation, friends and family were reluctant to share. I don't want to know the numbers in their accounts. I was just asking about experiences and struggles and mistakes, and it was difficult to get information. So the silence about money leaves many people navigating money alone without guidance. Now, the problem with traditional investing, many who do invest do so through banks, which management expense ratios, or MERs, that are around 2%. Actually, I just want to take 2 seconds to show that I've got a glossary of terms on my website as well. There's the link at the top. So if you put in MER, it will bring up management expense ratio. All the terms and acronyms in here are one sentence. I created this. I started creating this years ago. I was using it in my business courses instead of trying to go online, and when we didn't have access to the internet, or if the computers didn't have laptops, the students didn't have laptops in front of them, I had this on my own large screen, and not all, but many terms that we discuss in the savings, investing, and trading world are discussed, or are presented in here. I feel like I'm going really fast. Over decades, these fees can erode tens or even hundreds of thousands of dollars from your investments. I was at a conference a couple of weeks ago, and I was talking to this lady who was knowledgeable, and she knew about investing. She did everything through her bank. And then when I just pivoted and went, "Oh, do you know how much you pay in fees?" And she said no, but she was very happy at the result. Right? She had been investing, her and her husband had been investing for about 20 years, and they were happy with the number of where they were at. But they didn't realize the amount of money that they gave to the bank or the financial advisor. And there's nothing wrong with financial advisors. If people look at this stuff and they follow my presentation, or they talk to me, and then they decide to go to their bank and do it through them, that's fantastic. I'm not saying that people should not go to their banks. However, it is possible to do it on your own, right? So index ETFs that are available at banks, I should say, index ETFs, on the other hand, offer MERs as low as 0.05, or I was just, SPYM, I think, is 0.02. And they consistently outperform most actively managed funds from banks. So in what I present, I talk about exactly why lower fees matter. Here's a graph. So here's the example of that lady. Let's just say it's not exactly, but it's $100,000 over 30 years at a 10% gross return. I always use 10% because it's a nice round number. It's believable because the SPY, any S&P 500 ETF over its life is usually around 9, 10, 11%. So at 10% in a bank mutual fund at 2% MER, after 30 years, your investment goes from 100,000 to $1 million. That's fantastic. But with a lower cost ETF at 0.1%, it's 1.7 million, right? That's $700,000 that was given away to the bank to manage the money in the mutual fund. Right. So again, I'm not against banks. I don't want to get debanked, but it is possible to do this on your own. Here's another graph here of growth of $10,000. I was just using a specific mutual fund, which I was invested in. I'm still invested in one of my investments in the RBC Canadian Dividend Fund. I like this fund because it invests in Canadian banks that are making billions every quarter, and they invest in Apples and Googles and stuff like that. So it's a great fund. But if you invest in something like the SPY, you're paying less MER fees. So the reality of retirement poverty, this is something I've got in my presentation just to share that a lot of this is on older Americans, but it's the same in many countries. A lot of people above the age of 65 live below the poverty line. I noticed this years ago going to Walmart in the States and seeing, people that could barely stand. And it's not, I'm not saying that to be derogatory, but they're very, very older people that are, Walmart greeters. And oftentimes I don't think they're there because they want to. They're there because they need to put food on the table. They need to work. So why it happens in the States, rising healthcare costs. In Canada, we don't have that problem because we have universal healthcare, but insufficient savings and conditions, the decline of pensions and employer-sponsored plans, the over-reliance on Social Security or the Canada Pension Plan. These programs were not meant to be the entire retirement fund. They're there to help, but not to be the entire plan. So without building personal savings and investments, most people are left relying on inadequate programs. That's why learning how to invest is critical to avoid retirement poverty. So breaking it down through education, by learning investing step by step, you remove fear and guesswork. Knowledge gives you the ability to choose smarter investments, manage risk, and keep more of your own money. Investing doesn't just change your retirement, it changes your freedom, security, and opportunities throughout life. So here's a couple graphs. Again, the example I'm going to use is $100 monthly in SPY, the S&P 500 or VOO or SPYM, it doesn't really matter, something that tracks the S&P 500 at a 10% annual return. And I've already talked about the fact that this year, 2025, I believe the SPY returned 17%. Over the last 10 years, it's been 14.5 to 15%. So again, 10% is on the lower end. A lot of people say, well, where am I going to get 10%? Over time, it averages out and compounds out to about 10%. So here's if you start at 40. Again, $100 a month for 25 years, 133,889. If you start earlier, it's more than double, 382,000. If you start at 20, same amount, $1,057,000. Again, this doesn't take into consideration fees, trading fees. It doesn't take into consideration taxes. Talk to your tax accountant. There's ways to minimize taxes on these investments. IRAs or 401ks in Canada, the TFSA or RRSPs in different countries have different tools. So again, $1 million, right? If you start at 20, it's absolutely possible to have $1 million by the time you're 65. 65 is not on the chart, so the million would be up here. Okay, and with this, only $54,000 total was invested. Now, I'm not the first one to present this information, I'm sure, but it goes to show, why doesn't everybody do this? I've been doing this for a long time, and like I said, my daughters, that they don't know about it, but I've been doing it for them since birth. So here's the graph that shows all three. And then the key takeaway is that time in the market matters more than timing the market. Everybody's heard that. Starting early, get it done. I give this presentation, and then, a year later, I ask people, did you get started? People that were gung-ho saying, oh my God, I'm going to get started. You talk to them a year later and they haven't started. At the end of the day, just get it started. Do it today. Right? And I can help with different questions that you might have on how to get started. So even small amounts invested early can snowball into life-changing wealth, which brings me to the mic drop moment. So what if you started investing at birth? I couldn't start investing at birth because my parents knew nothing about investing back then. But my daughters, when they were born, right? So everyone's impressed by that $1 million starting at age 20. But what if mom and dad started at birth? What would that number be? Right? Again, it's hypothetical, but the number is $7.8 million. Right? So if you start at zero and you invest for 65 years, right? And 65 isn't on this chart, it would be up here. Right? And it's doable. Right? I'm doing it. My daughters are doing it. I'm not saying that they have $7.8 million now, but later on in life, they will have the potential if they don't touch it, if they just let it build, let it compound. The way that I plan on doing it is doing it for them for the first 18 years. And then once they're out of the house, they will start taking part of their salary and putting it towards their own investments. It's something that I'm going to help them achieve. So I'm doing this for 18 years. It doesn't, and my numbers I don't have to share exactly what it is that I'm doing, but maybe it's $100 a month. If $100 a month is too much, do it $25 a month. Right? Let's look at the numbers. Let's play with the numbers. Hypothetical example here. Let's do this. I'm not going to explain the formula here, but it's called the future value of an ordinary annuity. Right? So here's the number that I was just looking at here. Let's just put it at 65. Here's that $7.8 million at 10%, right? Starting at birth up to 65. The thing that a lot of people don't say is, let's put it at 50, right? We know it's 65, it'll be 7.8 million, but what if you stop at 50? You want to retire at 50? Well, you'll only have $1.7 million. The massive part grows in the last part. That's what compounding does, right? The rule of 72, you can divide this by 72 and it'll tell you the amount of time that it'll take for your investment to double. At 10%, it's 7.2 years. Right, so 7.2 years, you can double, right? So at 65, it's at 7.8. But let's say it's $50 a month, right? Well, it brings it down, but it's still significant. What is really important here is starting early. So with my daughters, and what I suggest is doing a lump sum, whatever you can afford at the beginning. If it's $2,500 that you give them as a gift starting off, it makes an incredible change to this because you started with a larger amount earlier. So I don't know if anybody wants me to put anything in here. Let's say $200 a month. Let's say it's 50. If I stop at 50, or if my daughters decide to stop at 50, it doesn't mean that the rest of this money won't happen. It just means that you start drawing on it. The money in the investment still stays in there. The bulk of it will just continue to grow, right? So again, hopefully some of this information is new to some people. Hopefully it's inspiring. And again, hypothetical examples are used for educational purposes. Actual results will vary based on taxes, fees, inflation, market performance, etc. What if, let's just bring it back to this for the fun of it, bring it back to 100, bring it back to 65. But what if it's 11%? Look at the change. It's absolutely mind-boggling. Okay. And if you can have a strategy that is a little bit better than dollar cost averaging, if you can avoid investing when it's really at the tops and you save some of that money and you wait till there's pullbacks, there are ways, and that's way more hands-on and it's way more complicated, but it is possible to get more than 10% over the long term. Okay, so that's what I just shared. So why it matters? Well, the earlier you start investing, the greater the compounding effect. Delaying even by 10 years could mean hundreds of thousands or more less by retirement. And the course that I've developed equips you with the knowledge to beat inflation. Again, I'm not trying to sell the course. I'm just saying that it's there, it's available. I do have a discount code. It's only $100. It's $99 for a 20 module video course that goes through all these things, obviously a lot slower with visual examples, etc. But in Avi's room, I'm available to answer any questions when it comes to this, or I could possibly do another webinar if you want to talk about, there's some people that are high income, is that the term? They're high net worth individuals. And for them, sometimes they want to invest in or take some of their shares and sell, let's say, covered calls on their investments. So instead of having 100 or 200 shares of Apple in their accounts, they can sell calls on it, monthly covered calls. And then that way that generates income. It's not for everybody. So let's continue. I'm almost done. So the paying yourself first, everybody's heard this, but the amount of people that do this is Probably 1%. It's unbelievable how simple it is. Automatically set aside 10% of your income. I put an asterisk here because I have younger students that are my mentors, and for them, they're still living at home and they have a job. They're making whatever, $50,000, $60,000 a year, but they're not paying rent. They drive mom and dad's car. Well, that 10%, especially for them, because it's early in the process, it should be 50, 60%. Right? You still live your life. You still, you don't live on canned soup, but it's possible to put more money, especially in at the beginning, and do it before you're spending. Right? If you made $400 after tax, at the end of the day, you have to say, I didn't make 400, I made 360, because that 40 is put aside, and do it automatically. Do it first as soon as your paycheck comes. I did this for years, and it was just set up with my bank. Right? It was a simple setup. Whatever my take-home pay was every 2 weeks, 10% of that was taken out, and then from there, it was invested. Start small if needed. Consistency matters more than the amount. If you never miss it, if you never see the money, you won't miss it. And then for trading profits, obviously this is for this room only. It's not something I share to everybody, but trading is obviously not required to start investing. But the way that I do it, I journal every trade in lots of 25 trades. I think I shared, actually, I'll come back to this. After 25 disciplined trades, the way that I do it's a system that I've developed. If I don't break my rules for 25 trades, and I think I've got it at 90%, I'm allowed to break my rules 10% of the time. So that's really 2 trades. If I break my rules for 3 or 4 trades, I can't do what I'm describing here. But after 25 disciplined trades, I remove 50% of the profits. So the whatever the account is at, or the number that I'll show you in the sheets afterwards, whatever that's at, I will leave 50% to continue growing in my trading account. But the other 50% I take out, and that money is transferred into long-term investments. For me at this point right now, I put it in for my daughters. Trading profits are not spending money for me, right? Everybody's different. They are converted into assets, right? This prevents lifestyle inflation. No Lambo for this guy. I know Avi feels the same way. It reinforces discipline. Short-term discipline funds long-term freedom. Don't get me wrong. If I want to go out and buy something, I'll go out and buy it. But at the end of the day, I'm not looking at buying Rolexes and doing videos in front of a rented Lambo or a rented private jet. Even though the private jet would be fun, because like I said, I am a pilot, but a story for another day. This is the journal that I use. These are not real trades, because it'll never happen that you're going to have exactly 3R or -1R. But this is the way that I teach trading. 2 results, -1 or +3. And if you win 50% of the trades, and you followed your rules, either category 1 or category 2 trades, then with the law of large numbers, if you flip a coin 50 times, when you get heads, you get +3, tails, you get -1, you're going to come out on top, right? So again, these aren't real numbers. I just put it in here for teaching purposes. So a few slides on what is investment risk. People ask me, I know so-and-so that they lost money on the stock market. If they lost money on the stock market, it was most likely a short-term trade, because investments over 20, 25, 30, 50 years, there's absolutely no reason why you should have losses. Again, I'd love to be able to share my TradingView chart, but I think I need to restart my computer. It's not coming up. I've never had that problem before. So let's look at risk. So lower risk savings account, GICs, that's a guaranteed investment certificate, government bonds, municipal bonds. This is stuff that I discuss, that I teach as well, but they're boring, right? They don't do much. They're safe because your capital is almost always 100% guaranteed, but they don't grow much. Moderate risk, well, you're looking at diversified ETFs and blue chip stocks. Or higher risk, well, you've got cryptocurrencies, speculative stocks. We were talking, Avi was talking about, I don't remember what the ticker was this morning, but penny stocks. Lunar, L-U-N-R, that's one of them. It's speculative. Rivian, when that came out, oh my goodness, when that IPO'd, within a few days, it was like at $120 a share. I was telling Avi this morning that when it IPO'd, within a few days, the market cap on that company was more than Mercedes and I think it was BMW combined, and they didn't have a product, right? So that's speculative. That's why it's higher risk. And then leverage products like futures or options and early stage ventures, right? SpaceX, are they going to IPO this year? Maybe, right? ChatGPT, will they IPO this year? Maybe. So there's definitely different ways of going about it. And when I talk about the investing course, I talk about all these things, about cryptocurrency, speculatives, leverage product, IPOs, options, etc. I don't go into detail with options, but I touch on it. So types of investment risk: market, credit, liquidity. Liquidity, Avi obviously knows about this with the options. When you run out of people available to buy your contracts, so the prices are going to go down if nobody's willing to buy, or if there are not enough buyers around. Inflation risk, interest rate risk, currency risk. Again, this can be screenshotted. I don't want to spend too much time on this. So the real world perspective: the S&P 500 has averaged about 10% annually since 1926, so over the last 100 years. But individual years have ranged. Some years are minus 43. You don't panic during those times when you're looking at investments, right? You double down, right? Especially if it's a mind like COVID in 2020. That was a beautiful spot to add into your position because it's for the long term, right? You're not looking at flipping it quickly. But over the last century, the US dollar has lost over 90% of its purchasing power. So if somebody had put $1,000 in there, or what $1,000 was worth in 1926, it'd be worth nothing today, right? So you have to hedge against inflation. Okay. Higher risk investments, potential for higher returns, lower risk, stress-free. Right? You have less stress with lower risk investments. So what the course that I offer covers, I'm just going to put this on here. I don't want to spend too much time on this because, like I said, this is not a marketing thing. Why financial independence must be learned. Well, financial independence isn't part of formal education. It just isn't. It's unfortunate. It must be learned intentionally. People have to have an interest in this stuff. And I get it that most people that I speak to don't have much of an interest when it comes to business or investments or what's happening in the world markets, in the economy, etc. But financial independence isn't something schools will hand you. It's a skill you have to go out and learn for yourself. And this course, again, I say course, but what it is I am willing to share in Avi's room for no cost is basically my knowledge in this area, right? How to beat inflation and rising costs of living, build wealth step by step, avoid retirement poverty, break free from the silence surrounding money, escape high fee investing traps, and create a future where money is a tool, not a source of stress. So, the complete investing blueprint, build wealth with confidence. This is my 2-minute spiel on the course that I've got. Because if this does go on YouTube, what I would suggest to people is to join Avi's room, right? So I will talk about it right over here. So thank you for spending time with me today. I hope I didn't go too fast. What time? 42 minutes. If this session helped bring clarity to saving and investing, there are a few ways to continue. I do have a 50% off the investing course. It's 99 bucks. It's possible to get it from my website. Again, if people get involved in this, that's great. If not, that's fine too. It's valid for maybe not the people in here. I don't know. Maybe the people will be interested, but younger people, people that that should know these things. The discount code, I will have it expire, I don't know, in 24 hours, 48 hours, we'll see. I'll also be sharing many of these concepts inside Avi's Discord room, where like-minded investors and traders connect. And hopefully people will ask questions. It can be a DM or it can be in one of the rooms that Avi has there. There's a lot of people with a lot of knowledge. So I think people should not be worried about asking questions. And if you're watching on YouTube, join Avi's Discord room to continue the conversation and learn alongside others on the same journey. The link will be in the comments to join Avi's room, because it's a phenomenal community. I am blessed to be part of it. Avi's knowledge when it comes to trading equities, options, futures is off the charts. And there's a lot of people that share all kinds of different things. So the discount code, if somebody would be interested in taking the course, the discount code is there. Those are my links. I've just started on Instagram, and there's my link tree with my email address and stuff like that. So hopefully this was interesting. If there's any questions, I'm here. I can stick around to answer questions. Or you can ask inside Avi's Discord room if there are specific areas of the investing world that you'd like me to create a webinar on. I'm completely open for that. Any questions? And if not, then I will let you get back to your charts.
That's brilliant, Gilles. Thank you so much. Love it. Making it all clear and simple for us. And yeah, guys, I think this is great information. It's amazing that you know, a lot of it's out there, but then you got to act on it. You got to do the simple, regular discipline. Put the little bit away from your monthly income and let it run. You know. So I love it. I love the mindset, Gilles. I love it. You know, that for me is brilliant.
Great. So, it's thanks for sharing that, Avi. I just wanted to add a little thing. It's unbelievable the misconceptions that are out there. Everybody knows somebody that tried to take a trade and they ended up losing money on it. But investing is different, especially the way that I teach it with ETFs, low-cost ETFs. You set it and you forget it and you don't even look at it. You don't manage it. It's not something you look at every day. Right? I rebalance things 6 months, maybe once a year, right? Just to look at it. But there's so many misconceptions. And that's the problem, that you try to have a conversation with people about this stuff and they clam up. They stop talking about it. They get all tense and they, you know what? The numbers that I shared, these are real possible numbers. You know, let's bring it back at more realistic, and you know, let's start at 20 and go to 65. This is absolutely realistic. So again, thanks Avi for inviting me. It was great to have this platform, and if there are any other questions, I'll stick around for a few minutes. If not, I'll see you guys in the room tomorrow morning.
Yeah, good stuff, guys. This is your opportunity to ask Joe questions on all this stuff, and I think this is all important stuff. Goes beyond all the trading stuff I typically talk about. So here's your chance.
And if somebody doesn't feel like going on the mic, I understand that. It can be a DM. Actually, I prefer them to be inside the room if that's okay with Avi. There's a question and answer tab in the room, and I can answer questions in there. I'm available most days. I'm in my office here, and yeah. So people are leaving the meeting now. So I'll say good afternoon, or good morning, or good evening, wherever you are in the world.
All right, love it. Thank you, Gilles. Thank you so much. And yeah, guys, Gilles is in our Discord. We do have the investing chat channel as well as the Q&A, and of course you can message Gilles as well. So all here.
Okay.
Thanks a lot, Gilles.
Perfect. Okay. Thanks. Have a good day, guys.
Take care, guys.